Hello, good morning, good afternoon, good evening from wherever you're watching this video from. I welcome you all to Forex Empire training series. This is Dr. Richard from Nigeria. So I'm going to be taking you through the basic concept of Forex trading in this video. All right. So yeah, it's our basic series and we are going to be talking about what Forex is. So without wasting much of your time, um, we are just going to go into what order of the day is. Now, what is Forex? Um, Forex, you should know, is um, the short term for foreign exchange. Foreign exchange is when you are doing an exchange or you are doing a business outside your locality, it becomes foreign, all right? Outside your locality. So let's say we that are in Nigeria now, we want to do a business with somebody who is in Dubai. It's already a foreign business, is already a foreign trade or whatever you can put in terms with it, all right? So Forex is the short term for foreign exchange, all right? So it's the global market that allows you to trade currencies, you understand? So in Forex trading, we are not basically going to the market to buy a commodity and no, we are actually trading currencies. That is, you are trading naira for dollar, or you are trading dollar for pounds, or you are trading pounds for yen, Japanese yen. All right. So now the Forex market size, you need to really understand how this works. Forex market takes place on the interbank market. That is within the banking system. That is where the Forex trading takes place. Banks are major key players of the Forex. We have the government, we have speculators, we have hedge funds, we have World Bank, and we have retail traders, which is you and I. You and I are retail traders, all right? So the bulk of it, that is the large chunk of Forex trading, is done within the bank, is done interbank, is done inside the bank, all right? So let's say you want to travel at the end of the day, or you want to go and import a goods, or you want to buy something outside the country. You are not going to buy stuffs outside country with your own local currency. You have to buy, with that country's currency. So you have to change your this thing to their. So most of this money, you get it sourced from the bank. All right. So unlike other financial markets in the New York Stock Exchange or London, you understand, the Forex market is neither physical, you understand, or there is a central particular place where you go to and order and you receive the foreign. No, this one is interbank, and it is considered an over-the-counter market. You understand? Due to the fact that once you have your internet, once you have your smartphone, once you have your laptop, you can access the Forex market. This is being done from a chain of network of banks, understand, over 24 hours. You should also understand that the Forex market runs 24 hours, 24 hours, 5 days, 245. That is, let's say from Monday to Friday, the Forex market runs. You can actually do your foreign exchange, trade your Forex and all that within Interbank. And it runs from Monday to Friday, all right? From Monday through Friday, that is 245. You understand? So you should understand also that this Forex market is not a particular country that has it. No, It's not Nigeria that have it, neither is it US that have it, or is Russia that have it. No, it is a global market. Forex is the most liquid market in the whole world. So you can say that this market trades with 6.6 trillion US dollars per day turnover. A particular country is not just the people that have the forex market. No, is a decentralized market. Let me put it that way. It's a decentralized market. Everybody is being plugged in into the forex market. So you can trade from anywhere. You can trade wherever you want, your kitchen, your room, your wherever country, whatever place. Even if you go on vacation, you can actually trade forex from there, in as much as you have your internet connection and you have a smartphone and you have your laptop. All right. So in this forex market, what like we mentioned earlier, what is being traded? You trade currencies, right? So just like we have our US dollar, we have our euro, and we have our yen. The US dollar is the most traded. Why? Because the US dollar is actually the major currency, or let me say the US is the world power now. So everybody is trading towards, and they have a very stable economy. All right, they have a very stable economy. So US is the most traded, which runs on a volume of 84.9% of all transactions. Then the euro comes in second place, which is 39.1%. Then the yen comes in at third place. So this is a chart that is actually showing the distribution in the forex market. You can see the USD, which is trading at almost 90%. The euro comes in, the Japanese yen, the GBP, that's the cable, the odd Australian dollar, the Swiss francs, the Canadian dollar, and then you have others. So this is how the distribution, or how the market is being traded. So now the next question you ask yourself, how do these people make money? All right. How do these people make money? You'll be hearing forex. I know most people will be telling you, oh, I'm a forex trader, I'm a currency trader. These are making money, blah, 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 blah. At the end of the day, you see the person making money actually, and you start asking yourself, how did this person do it? How did this person? It's very, very simple. There is no rocket science in it. Now, what do you need to do, or what do you need to understand in forex making? In forex trading that you actually make money is, let's say you buy shares, or you buy a particular currency. You understand? And you say the economy of this country is doing well, and the economy of this country is not doing well. All right. So I'm going to buy this currency against this other currency, because you are seeing both the economical news and the technical analysis behind that currency is actually showing you that the currency is going to appreciate within a period of time. You are going to buy it against a particular currency that the economy is not doing well. So it's just very simple. You buy and sell currencies. So placing a trade in this niche, or in this industry, is just very simple. The mechanics are just similar to when you go to the stock market. You buy a particular share and you say, oh, the shares of Tesla is going to rise to a particular level. The NASDAQ is going to rise to a particular, S&P 500 is going to rise. That's US shares is going to rise to a particular level, and you buy it low. You understand? So when you are buying it low, it will get to a point where you say, oh, I'm satisfied with this profit. I'm satisfied with the return on investment that I've gotten here, and you sell. So it's just simple. So if you are an experienced trader in the stock market, doing forex will be very, very simple for you. Doing forex will be very, but if you are not still able to pick it up, That is the reason why we are doing this course. And at the end of the day, you are going to learn how to trade. In as much as you go through this course from the first series to the last series, in as much as you're going to go through it, give it your time, you are actually going to go pro. You're actually going to become a professional trader. So let's move on. Here is an example of, like I said, how you make money. So you say you purchase 10,000 euros against USD at the exchange rate of 1.1800. All right. So you are plus 10,000 on euro, and you are minus 11,800 on USD. All right. So 2 weeks later, because you have read economical news, your technical analysis are in check, and you have decided, okay, I'm going to buy this euro, I'm going to buy 10,000 units of it, and I'm going to hold it for 2 weeks. I'm going to hold it for 1 day. I'm going to hold it for 3 days. And in 2 weeks later, you exchange that your 10,000 euros back to the US dollar at an exchange rate of 1.2500. You have, remember, you purchased euro against USD at 1.1800. All right. Then you are now exchanging your euro to buy USD at an exchange rate of 1.2500. So the difference between 1.2500 and 1.800 is 700. All right. So your profit is actually $700. I hope I'm making some, I hope you're understanding me. So just like we say, currencies, money is what we trade here. And like I told you, where you are buying shares and all that, you buy shares, you see the economy of this country is good, you buy their currency and you say, okay, I'm going to hold this in a long term. I'm actually going to, do some research, follow this pair or blah, 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 and all those things. And you speculate to make money, understand, in a particular direction. You can also make money from an economy that is crashing, because as an investor or somebody who is into foreign exchange, you see, oh, the economy of China is going up, so I just have to buy the yen, right? You just buy the yen. The economy of US is going down, I'll sell the euro. Yeah, sorry, I'll sell the USD. And when you are selling off, you are actually making profit, both in crisis and when things are normal. All right. So what is a currency pair? Currency pairs are this forex trading, like we said, is the simultaneous buying of one currency and selling another. So currencies are traded through a broker or a dealer. Understand? For you to actually have access to trade these pairs, you need to have access to a broker. You need to go through a broker who has the license to operate on the OTC. Okay, the license to operate on the OTC. So currencies are quoted in relation to another currency. So you will say, for example, the euro and US dollar, or the British pound and Japanese yen. So the euro is EUR, then the US dollar is USD. Then the GBP is GBP, that's British pound is GBP, and Japanese yen is JPY. So these are currencies. These are countries' currencies that you are buying. And they can be actually classified in categories, which is the majors, which is the crosses, and the exotics. So the major currencies are the most traded currency. So while there are potentially lots of currency you can trade, understand, there are probably major ones that you can trade. They are called majors. All right. So because they are mostly heavily traded, remember when I told you Euro USD is the USD is being traded, followed by the euro, followed by the JPY, followed by the GBP and all that. So according to how they are being traded, that is how they are being ranked, or how they are being categorized. So at the end of the day, you will see that USD is the first one, which has about 84%. I know you remember, euro 34%, JPY 19, and the rest. So the USD, the euro, the JPY, the GBP, and the CHF are major currencies. These are major country currencies that are being traded. All right. So we have the minor and the cross pairs. So currency pairs that don't contain US dollars are known as cross currency. All right, or cross pairs. Let's say GBP JPY is a cross, or you can call it a minor. So major crosses are also known as minors. Why not as frequent traded? It is not being traded like when you have the USD that is being attached, like say Euro USD, GBP USD, USD CHF, USD JPY. Those ones are majors. They are being traded. All right. But Euro JPY, GBP JPY, those ones are not really traded often because it doesn't have the USD. It doesn't have the USD attached to it. Okay, so most actively traded crosses are derived from the three major non-USD, which is the euro, the JPY, and the GBP. All right, so and we also talked about the exotic pairs. This exotic, like we have the USDs are, we have the USD Kiwi, we have the USD Brazil, we have USD SGO, that's Singapore, and Thailand and all that. These ones are exotic pairs. You understand? So depending on your broker, it's not all brokers that give these services for the USD exotic currency pairs. Most brokers don't give that services for you to actually trade on them. So that is that for the currency pairs. Then we have in this currency pair, we have the base and we have the quotes. All right. The base is, let's say we have just as it is on the slide, we have USD CHF. All right. USD is the base, while the quote is the CHF. So for example, if the USD CHF rate equals to 1.6350, all right, then one USD is what CHF, one USD is what CHF 1.6350. So in the forex market now, the US dollar is basically considered as the base currency for quotes, meaning that quotes are expressed as one unit, one USD per the other currency. You understand? So the primary expectation to this rule are the British pound, the exemptions. The primary exemptions to this rule are the British pound, the euro, the Australian dollar, and the New Zealand dollar. So this is a quote. All right. So what is a quote? The quote is the second currency in any currency pair. Just like we have your GBP USD in this case. You see, the GBP is the base currency here, and you have the USD that is the quote currency. So the next is the forex trading sections. All right. Now you know what forex is. You know what base and quotes. You know what is the most traded currency pair. You know the percentage they are being traded and how we make money in forex trading and all that. So now we need to know when this forex market operates. So you need to know when it operates. You need to know why you should trade it, and you need to know who makes up this market and the time, you understand? The time to actually trade and make money. So timing in Forex or in trading is very important. Timing is very important. There are some times of the day when you meet liquidity. There are some times of the day when you will not meet liquidity. What do I mean by liquidity? Liquidity implies volatility. Volatility means when there is much activity in the market. So you say either liquidity or you say volatility. So this has to do with when the market is more volatile or when the market is less volatile. So you need to know, when will I actually come in and make money? When is this market volatile? When is this market not volatile? And you need to understand that the Forex market actually trades 24/5. I said earlier that the market operates 24/5. The market opens 10 p.m. Nigerian time, 10 p.m. GMT on a Friday. Sorry, it closes 10 p.m. GMT on a Friday and opens 10 p.m. GMT on a Sunday. All right. So the market opens on Sunday and closes on Friday. So it runs through 24 hours, 5 days a week. So there are different sections. Just like I said, you need to know when the market moves up, when the market moves down. You understand? How you can actually make money when you are into the market. All right. So we have the trading hours. We have the trading hours, which ranges from the Asian section to the London section to the New York section. All right. Asian section has to do with Asian, the European, the North American sections, and we call them in generally Tokyo. All right. Then we'll have the London, when we have the London Stock Exchange comes on board and all that. Then we'll have the New York section when the New York Stock Exchange comes on board and the market. So at this time, these are when the market tends to move, and these are when the market tends not to move. Normally, if you are trading Asian section has less liquidity compared to London and New York. All right. We have Frankfurt. Frankfurt actually opens before London. All right. Then London has an overlap with New York. So, but somebody who is trading in Asian section might not really make a lot of money as someone who is trading in the London section and the New York section. Why? Because London Stock Exchange is open at London section. New York Stock Exchange is open at New York section. So these are times that you actually need to know when to step into the market and when not to step into the market. These are just the basics. All right. So as time goes on, we are actually going to take you on when the market opens, what to trade, how to trade them, or the pattern you should look for, and all that and all that. For now, this is the basics. And until then, I wish you good luck and happy trading.